The Biden administration is out with a new call to Congress to pass legislation that would require that stablecoins be regulated and more closely monitored. The president's working group on financial markets released a new report this week suggesting stablecoins or digital assets tied to traditional currencies could be widely used by households with more oversight. For more on this, we have Yahoo Finance's own Jennifer Schonberger here to discuss. And Jennifer, tell us more about what was included in this report and what it suggests for stablecoins issuers.
Good morning. That's right. The Biden administration recommending that stablecoin issuers be regulated as banks. As you mentioned, these recommendations coming in that long-awaited report from the president's working group on financial markets, where they are urging Congress to come up with a brand new set of standards to oversee stablecoin issuers based on each issuer's risk profile. At the same time, they're directing agencies to use their current authorities to regulate stablecoins as best they can now. Now, on that specific list of recommendations, the group urging Congress to mandate stable coins can only be issued by banks. That would subject them to oversight by the Federal Reserve and the comptroller of the currency, which would mean they would be subject to complying with capital requirements and liquidity requirements. The Biden administration is also recommending that digital wallets be subject to oversight, including restricting digital wallet operators from lending stable coins, as well as subjecting them to capital requirements. The PWG also recommending that FSOC, the Financial Stability Oversight Council, look at whether certain stablecoin activities should be classified as systemic or likely to become systemic. Stablecoins are a rapidly growing sector of the cryptocurrency markets, now worth nearly $130 billion globally, according to their market cap. And regulators are hoping that these new recommendations will guard against potential runs on stablecoins that could pose risks to users as well as the financial system. Also contained within this report, guidelines that say that stablecoins could be classified as a commodity or a security, which would make them subjective to oversight by the SEC and the CFTC. Of course, SEC Chair Gary Gensler has likened stablecoins to poker chips in casinos and has said that stablecoins should be classified as securities. We also learned in this report that both the SEC and the CFTC are looking at actively regulating cryptocurrency exchanges. Next up, members of the Treasury head to Capitol Hill in the next days, weeks, and months to discuss with members of Congress putting into place these recommendations.